Yo, welcome to another live stream. Today is August 8th, 2024. And sorry for being a little bit late today. I just got back from family thrift and yeah, I just got back home actually. So, let's get right into the charts here. Turn on some music. Okay, so coming into this morning, I noted out, hey, we had this placed lower, right? So notice this daily candle here on the daily time frame. So we had this daily fair value gap. We retraced back inside the premium of the price leg, and we had a sell-off after tapping into it. So we had a bearish daily power of 3, and I was anticipating for prices to take out this daily candle's low, which we did. There was no entry model to take that, that setup, so there's really no point in forcing it. But I do want to note out how we have these two 4-hour fair value gaps here. So there's one here, and there's another one here as well. If we are to continue lower, right? So if we are to hold this previous day high, we have to respect this daily or this 4-hour fair value gap to continue lower. On the 1-hour time frame, like, it's a little bit clearer here, but okay, so take a look at this 6-hour fair value gap and this 8-hour fair value gap. Depending on how we close on this 8-hour candle here in this 4-hour candle, will tell me if we are going to continue higher or not. And we close in about 20 minutes or so. We can also take the, this swing high from the daily fair value gap into the swing lower here, Asia's lows, and we can basically just get the discount and premium of this range, which it appears that we are already retraced back inside the premium. So now what I'm waiting for is, if if we are bearish, right, we should run and take out. I'm gonna actually delete this 8-hour fair value gap. If we are bearish, we should disrespect this 1-hour BISI here, and we should disrespect it, right, to continue lower. So if we are anticipating lower prices, something like this should happen, like that. We should see something like that. But there's another scenario where we trace back inside it, we respect it, and we continue lower. If we get something like that, then we would be bullish. But it just depends on how we close here on this 8-hour and 4-hour candle. But yeah, I mean, I would like to wait and see what we do here in the next 20 minutes or so. But yeah, let's actually announce to everybody that we are live. There's not a reason for me to say sorry. Running a little late. Now let's link to YouTube. Oh, ICT's live right now. Oops, I did not mean it. That one. Sorry, everybody. I'm a little bit tired, but it's cool. So there's that. Let's get the motivational quote for today. For success. bum 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 bum. Ooh, this one's good. So we are closing in that, on that 4-hour candle in about like 12 minutes or so. Like I said, we should, if we create this hourly fair value gap here, we should disrespect it if we are going to see lower prices, and also we should also disrespect this 15-minute fair value gap too. So actually, I'm gonna note that out. So I'm gonna draw up that 15-minute, and like I said, if we are to see lower prices here, we should disrespect it and treat it as an inversion to continue lower. There was actually a setup here that I saw during the London session. This one. So that's a 30-minute high. Yeah, this retracement here. one trade that would have taken this one too. This one I'm actually not off. Like that actually. But yeah, we should, you know, if we get a reaction, a bullish, you know, 15-minute power of 3 after coming into this 15-minute fair value gap, we should treat it as a support system or support level and see lower prices or higher prices. This 15-minute fair value gap, if we don't, then we're going to see lower prices. So like I said, if we respect this 15-minute fair value gap, we should see higher prices and we should be able to take out this high right here. However, if we don't, then we're going to see lower prices. We still have London lows intact, Asia's lows. So just watch up on that, and yeah. Let me pull up YouTube chat. Alright, there we go. So let's just pull up the 5-minute time frame here. Pull up the 15-minute time frame. And yeah, like I said, if we get a you know, bullish 15-minute power of 3 after coming into this 15-minute fair value gap, it will be very clear to me that we are going to see higher prices, and we are probably going to take out this high here. But we'll see. We'll see if we can create like some sort of fair value gap to enter off of, but we still have like about 6 minutes and 30 seconds left to the closing, or to the open of the 10 o'clock candle. For now, I do want to go over my risk management plan for today. So I am actually going to elect to trade normal position size, which means that I'll be risking $480 on my first trade if it's a 1-to-1 risk to reward. But if it's a 1 to 1.5 or higher risk to reward, then I'll take a $720 maximum stop loss. Yeah, so you guys can take a look at the numbers here. So like I said, that what I just stated there was for my first trade, but if for my second trade, right, let's say I win 500 on my first one, I'll be risking half of that on my second trade. So half of 500, 250. So I'll be risking 250 for my second trade. But if I lost my first trade, then 240 will be my maximum stop loss if it's a 1-to-1 risk to reward. But if it's a 1 to 1.5 or higher risk to reward, then 320 will be my maximum stop loss. and vice versa. For my third trade, like I said, if I win my second trade, then my third trade I'll be risking half of those profits from my second trade. So let's say I make, 300 my second trade. My third trade I'll be risking 150. And if I lose my second trade, then I'll risk 120 if it's a 1-to-1 risk to reward, and if it's a 1 to 1.5 or higher risk to reward, then I'll be risking 160. All right, so there's the numbers part of the things here. You guys can take a look at that. But yes, you guys can screenshot whatever you guys want with that. Let's say, and I never take a trade setup where it's like an 8.5 to 1 risk to reward. I'm not going to be risking 85 cents to make $1. That makes no sense. And I'm not going to take any models that are below a 1-to-1 risk to reward. Or I already said that, I'm sorry. Sorry. My risk to reward should always be set at where I'm going to take my first partial and move my stops to break even, not set at where my terminus is. So even though, let's say, I'm targeting these highs here, simply because I'm targeting these highs, would mean that's my terminus, but I'm basing it off of the 15-minute power of 3, so I'll be entering off of the 15-minute, or the lower time frame sub 5-minute entry model, and I'll be targeting that 15-minute high as my partial, and then this hourly high here could be my terminus. And whenever I do take a partial, I always want to take half of the position size off and move stops to break even. So if my my original position size is 20, right? Then I'll take off 10 on my first partial, move my stops to break even, and then if prices hits my second TP, then I'll take off 5. And I'll just slowly take off half and half and half until my terminus gets hit. And for that, that's going to be all for my risk management part of the stream. Yeah, thank you guys so much for paying attention to that part. The next thing I do want to go over is the pros and cons from last week. So one of the pros from last week is that I understood the higher time frame narrative. I knew what we were wanting to do on the higher time frame, and I positioned myself according to that. So I didn't take a 15-minute power of 3 model. I was actually trading the higher time frame model, and like I said, the reason why I was able to do this is my understanding of how fractal prices could be, and yeah. One of the questions I also was able to answer last week was, why did we create this power of 3? Was there a reason why we created that power of 3? Like here we have an example here. Prices retraces into this 15-minute fair value gap here that was created during lending session. When prices retraced back inside this 15-minute fair value gap here, right? We create a oh shoot, let me get my trading thing ready. We have 20 seconds left. I guess I'm gonna have to be trading on here then. Oh, what's up, boy? It's my alarm. Dude, my charts are actually so messed up. So there's my SMT chart. Alright, there we go. So what I was trying to enter there was, so notice how this notice this 15-minute power of 3 here, right? We came off of a 15-minute fair value gap here, and we had a bullish closure. We understood why we created this bullish power of 3. It's because we traded back inside this 15-minute fair value gap and we held it, and we created a bullish power of 3. So this bullish power of 3, I can anticipate for prices to take out this 15-minute high. So whenever what I was trying to do there is trying to get a entry model to target that 15-minute high, but we didn't actually end up getting the model, which is cool. Like I said, sometimes the model doesn't present itself, but yeah, that was what I was trying to aim for there. This is a 10 o'clock open. Yeah, that reaction to that 15-minute power of 3 or 15-minute fair value gap actually is like really, really nice. That reaction right there is very, very good. So we just took out the 4-hour high, hourly high, and I'm pretty sure we took out 8-hour high as well. Yeah, we did take out 8-hour high. So now what would I like to do is probably want to see prices rebalance this fair value gap here. So that could be a target. You know, 1 hour FVG low. So I have that as a target. I lost track of what I was trying to say, but yeah, on my pros and cons, like I said, I understand why we created that bullish power of 3. So those are my 2 pros from last week. One of the cons is basically getting my system. I didn't have my system, my trading platform like all ready to take entries and stuff, whatever. And I need to work on that. I should be like a sniper where I'm always ready to take my shot and not have to go through what I just have to go through there. Or like I had to go through my funded futures and get all of that logged in and stuff. So yeah. That signature and price right there, where prices reacted to that consequent encroachment, is actually like A+. It's just like I said, we don't have an entry model. Like there's prices doesn't really retrace back inside a PD array of choice, and my PD array of choice is the fair value gap. So here's the 1 o'clock open, not 1 o'clock open, sorry, 10 o'clock open. We opened up at 10 o'clock and we didn't really retrace into anything actually. We just kind of just took out the high right at the open. So it's okay. Prices, like I said, sometimes prices will run without you, and it's up to you to determine if you're going to be okay with that or not. So let's see if we can create some sort of, you know, entry model to target that hourly high or 1 hour fair value gap low to rebalance it. But if we don't get an entry model, then I will consider not taking anything. Sorry about that. UFC just popped up. So like looking on the 4 hour time frame here, still we are still within the 4 hour fair value gap or 4 hour civi. So I want to see us, you know, completely close above this to confirm that we are bullish. If we do get a, you know, a low below here, if we can trade below this 15-minute low here, that would be considered a market structure shift. So I'm actually going to denote that as a market structure shift. So if prices trades below that 15-minute low here, swing low, then that would be considered a market structure shift for me. Yeah, I'm just gonna continue to watch prices here. Not really much to anticipate. I'm gonna close the stream off early here. Like I said, we already did basically what my morning objective is. What I'll end off with is, like I said, if we see a reaction to this 4-hour fair value gap steal, we should disrespect this 15-minute low and, you know, come really strong and aggressive with displacement below this swing low and then trade off lower. But if we don't do that and continue higher, then we have standard deviations here that I gave you guys.